Welcome, traders and enthusiasts, to explain the charts on this September 11th, 2025. Today, we're embarking on an in-depth journey through the Bitcoin market, meticulously analyzing both critical news developments and intricate chart patterns for BTCUSD. Bitcoin has unequivocally cemented its position as a major force in global finance, with its market capitalization reported to have surpassed $4 trillion earlier this year, a testament to its growing influence. The cryptocurrency landscape is buzzing with activity, driven by a confluence of macroeconomic factors, increasing institutional adoption, and evolving regulatory frameworks globally. Let's kick things off by dissecting the most recent and impactful news stories that are currently shaping investor sentiment and influencing Bitcoin's trajectory. On a decidedly bullish note, numerous reports, including one from Cointelegraph, highlight Bitcoin eyeing the $115,000 mark. This optimism is partly fueled by a surprisingly weak reading on producer prices, suggesting potential inflationary relief and a more dovish stance from central banks. News BTC further corroborates this positive outlook, noting Bitcoin's rebound past $114,000 this week, after briefly dipping to $107,000. Analysts are also pointing to a robust crypto market rally that could extend well into the fourth quarter, underpinned by strong liquidity and supportive regulatory signals. A significant driver of this bullish momentum is the increasing institutional appetite. BlackRock, a titan in traditional finance, is reportedly exploring tokenized exchange-traded funds, recognizing tokenization as a game-changer for finance, a move that follows the success of its Bitcoin fund. We're also seeing nation-state adoption, with Kyrgyzstan establishing a state-held Bitcoin reserve and government-backed mining operations. Corporate treasuries are swelling, with Metaplanet Incorporated and El Salvador adding to their holdings, pushing collective corporate Bitcoin reserves past 1 million BTC. These institutional inflows into spot Bitcoin ETFs are a crucial indicator of mainstream acceptance and a consistent source of demand, further reinforcing the long-term bullish narrative. Adding to the fervor, prominent figures like Ash Crypto and Michael Saylor are predicting Bitcoin could reach $150,000 by Christmas 2025. Some even speculate a move towards $360,000, driven by the confirmation of a bullish inverse head and shoulders technical pattern. Moreover, the Federal Reserve is anticipated to trim interest rates next week, a macroeconomic development that traditionally encourages investment in risk assets like Bitcoin. And models suggest BTC is currently trading below its fair value relative to money supply, a historical precursor to market rallies. However, a comprehensive analysis demands we also acknowledge the prevailing cautionary and bearish signals. Bitcoin has experienced an 8 to 10% decline from its all-time high of $124,500 recorded on Binance in August 2025. Which has inevitably contributed to a more circumspect market sentiment. This recent pullback was not without consequence. News BTC reported that long-term Bitcoin holders, those holding for 5 to 7 years, collectively lost $6.4 billion in realized cap, indicating a significant shakeout among committed investors. Furthermore, the correlation between Bitcoin and gold has recently turned negative, diverging from its traditional safe haven association during times of economic uncertainty, which could be a concern for some investors. CoinDesk highlighted that implied volatility in the market is at multi-year lows, signifying a period of tight consolidation and indecision. This sideways price action is notably occurring ahead of critical CPI data releases, with a clear market bias towards seeking downside protection. We also cannot ignore the cautionary signal from Alfractal, who suggested that Kospi's record high could incrementally signal that Bitcoin's bull run might be approaching its conclusion. Additionally, Chinese regulators are reportedly preparing to restrict mainland state-owned enterprises and banks from stablecoin and crypto initiatives in Hong Kong, posing a potential headwind for broader Asian adoption. Now, let's transition from the headlines to the hard data and examine the Bitcoin price action on our one-day chart. Looking at the entire dataset available, we can clearly trace Bitcoin's impressive ascent through late 2024 and into 2025, demonstrating strong overall bullish momentum leading up to its August 2025 all-time high. The chart illustrates periods of significant accumulation followed by sharp upward movements, reflecting the sustained institutional demand and growing adoption narratives we discussed. We can identify key psychological levels that have acted as pivotal points. The $100,000 mark, for instance, transitioned from a major resistance to a strong support level during this run, a testament to its significance. Notice the generally higher volume accompanying major upward moves, confirming strong buyer conviction and broad market participation in these rallies. Conversely, periods of retracement or consolidation, especially earlier in the dataset, often exhibited lower volume, indicating profit-taking rather than a fundamental shift in market structure. The peaks and troughs throughout this daily chart tell a story of consistent price discovery and increasing market maturity as Bitcoin navigates its various cycles of boom and bust while demonstrating remarkable resilience. The recent price action on this daily time frame shows a recovery from the sharp correction in August, pushing Bitcoin back towards the $110,000 to $114,000 range, validating the news of its recent rebound. This broad perspective on the daily chart emphasizes the long-term upward trend, despite short-term volatility, which aligns with the expert predictions of higher targets like $150,000 and even $360,000. Traders often use this daily chart to identify primary trends and major support and resistance zones before drilling down into shorter timeframes for execution. To specifically illustrate the recent correction from its all-time high, let's narrow our view on the one-day chart to the period between August 1, 2025 and September 1, 2025. Here, we see Bitcoin trading around $115,762 on August 1st and then embarking on a final thrust upward, culminating in its local peak of $123,320 on August 13th. This period of rapid appreciation, visible in these few bullish candles, likely saw significant inflows, pushing the price close to the reported $124,500 ATH. However, immediately following this peak, a sharp reversal occurred. From August 14th to August 29th, Bitcoin experienced a significant sell-off, with the price plummeting from its high to $108,378. This represents an approximate 12% decline, perfectly illustrating the 8 to 10% drop from ATH mentioned in the news BTC summary and likely contributing to the $6.4 billion in realized cap losses for long-term holders. The volume during this downward trend was notably high, especially on August 19th with 9,528.15 BTC and August 29th with 8,436.18 BTC, indicating strong selling pressure and confirming the conviction behind the bearish move. The low of $108,378 recorded on August 29th marked a significant temporary bottom for this correction phase, acting as a crucial support that the market retested. This focused view highlights how quickly market sentiment can shift, even after reaching new highs, and underscores the importance of risk management in highly volatile assets. Transitioning to the one-hour chart, we now gain a much finer perspective on Bitcoin's recent price movements, particularly during the consolidation phase since late August. As the news highlighted, Bitcoin has been consolidating tightly, primarily between the psychological levels of $110,000 and $115,000. Examining the candles from late August, particularly between August 22nd and 25th, we observe a range-bound period. Price initially moved from around $112,500 to a high near $117,400 on August 22nd, before retracing. This activity, especially the rebound from lower $112,000 levels within this period, shows underlying buying interest, but also a struggle to maintain higher prices, reflecting the broader market's uncertainty. The current one-hour data, however, precedes the early September period where news suggested a bounce back above $112,000 after briefly slipping to $107,000. The overall volume on this hourly chart, while fluctuating, aligns with the broader sentiment of lower implied volatility, suggesting a market waiting for a definitive catalyst rather than exhibiting strong directional conviction. A notable upward move occurred on August 22nd at 1400 hours Universal Time Coordinated, when price jumped from $112,450 to $115,805. Perhaps reacting to specific intraday news or a short squeeze, before settling back into consolidation around $113,000. For a sustainable bullish breakout, the market needs to decisively clear the $114,250 resistance level, and ideally the $115,000 mark, on increased volume, to signal a potential move towards higher targets as per expert predictions. Let's zoom in further to the 15-minute chart to capture the very latest market behavior and immediate trading signals. In the last few hours, leading up to our current time on September 11th, 2025, at 21:06 Universal Time Coordinated, Bitcoin has been exhibiting extremely tight range-bound movement, often characterized by small candles and fluctuating close prices. Specifically, from around 18:06 Universal Time Coordinated on September 10th until the current moment, the price has hovered predominantly between $113,500 and $114,000. Notice the minimal volume across these recent 15-minute candles, reflecting the muted action and sideways price action highlighted in the CoinDesk report, as traders await definitive signals, such as the upcoming CPI data. The immediate resistance around $114,000 is palpable, with any minor upward thrust being quickly sold into, preventing a breakout to higher levels. This indicates a strong ceiling that buyers are currently struggling to overcome. On the downside, short-term support seems to be holding around $113,700. A break below this would likely see a rapid test of $113,500 and potentially deeper towards the broader hourly support zones, indicating a shift in intraday sentiment. For short-term traders, this tight consolidation can present opportunities for scalping within the established range, but it also increases the risk of false breakouts in either direction, demanding precise entry and exit strategies. The lack of strong momentum on this time frame underscores the cautious sentiment. Traders looking for confirmation of a move towards $115,000 would ideally want to see sustained breaks above $114,000 on higher volume in these shorter timeframes, validating bullish conviction. To bring our comprehensive analysis on Explain the Charts to a close, let's recap the critical insights for BTCUSD as of September 11, 2025. In the short term, Bitcoin is navigating a crucial consolidation phase. Key immediate support levels to monitor are $112,000 and the psychological $110,000 mark. Maintaining above these levels is paramount for any near-term bullish continuation. Conversely, significant resistance is firmly established at $114,250 and extends to $115,000. A definitive, high-volume breakout above $115,000 would serve as a powerful confirmation of renewed bullish momentum. If this breakout occurs and is sustained, the likelihood of Bitcoin reaching the $150,000 target predicted by prominent analysts by Christmas 2025 increases substantially, perhaps to 60 to 70%. This scenario is heavily reliant on sustained institutional ETF inflows and a favorable macroeconomic backdrop, particularly the Federal Reserve's dovish stance on interest rates. However, should Bitcoin fail to hold above $110,000 and break down with significant selling pressure, we could anticipate a retest of lower support zones, potentially around $105,000 or even $100,000. We assign a 30 to 40% likelihood to this bearish outcome, which could be triggered by unexpected hawkish shifts from the Fed or adverse global headline news. The highly ambitious long-term target of $360,000, driven by the inverse head and shoulders pattern identified in the news, carries a more modest 20 to 30% likelihood of materializing within the next 12 to 18 months. This outcome is contingent upon a dramatic acceleration in Bitcoin's institutional adoption and no unforeseen black swan events disrupting the broader crypto market. Beyond these price levels, active traders and investors should pay very close attention to the impending CPI data release and the Federal Reserve's interest rate decision next week, as these will undoubtedly act as the next major catalysts for Bitcoin's direction. Additionally, ongoing monitoring of Bitcoin spot ETF inflows and global regulatory shifts, especially concerning stablecoins and digital assets, will provide crucial insights into the broader market sentiment and Bitcoin's long-term integration into the financial system. Thank you for tuning in to Explain the Charts for this comprehensive deep dive into BTCUSD. We encourage you to conduct your own research and make informed decisions. Until next time, stay vigilant, stay disciplined, and happy trading.